Welcome, everyone, to today's crucial market update, where we're about to dissect a financial phenomenon that's, quite frankly, redefining investment landscapes right before our eyes. We're talking about an entity that has shattered records, captivated institutional giants, and ignited a fervor across global financial markets at a speed previously unimaginable. If you've been following the world of exchange-traded funds, or ETFs, then you know there's one name dominating the headlines: BlackRock's iShares Bitcoin Trust, or IBIT. This isn't just another fund, it's a testament to a monumental shift in asset preference, and its trajectory is nothing short of breathtaking. Prepare yourselves, because the numbers are staggering. BlackRock's IBIT has not just grown, it has absolutely exploded, crossing the $70 billion mark in assets under management in an astonishing 341 trading days. Let that sink in for a moment. This isn't just a new record, it's the fastest growth ever reported by any exchange-traded fund anywhere in the world. Think about the scale, the speed, the sheer volume of capital flowing into this single vehicle. To truly grasp the magnitude of this achievement, we need to put it into historical context. The previous record holder, SPDR Gold Shares, famously known by its ticker symbol GLD, took a full 1,691 trading days to reach that same $70 billion milestone. IBIT achieved this feat 5 times faster than GLD. This isn't a marginal improvement, it's an exponential leap forward, highlighting the rapidly accelerating demand for regulated digital asset exposure in an investment environment that continues to evolve under President Donald Trump's administration, navigating both traditional market forces and the burgeoning crypto economy. It's important to note here that the provided sources do not directly link President Trump's administration to IBIT's success, but his presidency forms the current backdrop for the U.S. and global financial landscape. But the record-breaking didn't stop there. When we look at other titans of the ETF world like IEFA and VOO, they required 1,773 and 1,703 days, respectively, to cross the $70 billion valuation mark. BlackRock's IBIT didn't just outpace them, it left them in its dust, signaling a significant shift in investor sentiment and asset allocation. This rapid ascent firmly places IBIT among the top-performing U.S. ETFs, unequivocally solidifying BlackRock's formidable position in the digital asset market. The consistent momentum of IBIT is backed by sustained market demand. Since the very beginning of 2025 alone, IBIT has welcomed over $9 billion in inflows. This isn't a flash in the pan, it's a persistent buying momentum, fueled by a profoundly positive sentiment in the spot Bitcoin sector. It's a clear indication that investors, both retail and institutional, are actively seeking ways to gain exposure to Bitcoin through trusted, regulated financial products. Just in the past few weeks alone, IBIT has absorbed an additional $2.5 billion worth of Bitcoin. This ongoing accumulation strategy has propelled BlackRock to the forefront of institutional Bitcoin investment. The fund now holds an astounding 661,457 Bitcoin, making it the largest institutional Bitcoin holder worldwide. This is a monumental achievement, surpassing even Michael Saylor's MicroStrategy, which famously holds 582,000 BTC, and even outperforming crypto exchange Binance, which holds 629,119 BTC. The sheer volume of Bitcoin held by IBIT translates to approximately 3.3% of the total maximum supply of Bitcoin. This isn't just about becoming a major player, it vividly illustrates the accelerating pace of institutional adoption within the digital asset space. Analysts are even projecting that IBIT could potentially outpace Satoshi Nakamoto's theoretical holdings, estimated at around 1.1 million BTC, by as early as 2026 or by the end of next summer. This truly underscores the transformative power of this ETF and the unprecedented speed at which traditional finance is embracing digital assets. The institutional embrace extends far beyond just direct investment. Consider the expanding global reach of IBIT. The Moscow Stock Exchange, for instance, has already listed Bitcoin futures tied directly to IBIT, making it accessible for accredited market participants in Russia. This development is a direct consequence of the increasing global interest in digital ETFs among major financial institutions, showcasing BlackRock's growing international influence. Furthermore, the integration of Bitcoin ETFs into traditional financial services is accelerating. JP Morgan, a titan in the banking sector, is set to begin offering Bitcoin ETF-backed loans, starting specifically with BlackRock's IBIT. This initiative is expected to broaden its scope to include other ETF issuers as well. Such moves are a strong signal of growing trust and confidence in regulated crypto-based financial products, bridging the gap between conventional finance and the burgeoning digital asset economy. Robert Mitnick, BlackRock's head of digital assets, shed more light on this phenomenon during a recent appearance on Bloomberg ETF IQ. He emphasized that while retail and investor demand initially drove the surge in Bitcoin ETFs, more recently, there's been steady progress of more wealth advisor adoption, more institutional adoption. Mitnick noted that for many, this is their first foray into the crypto space, while others are longtime Bitcoin investors leveraging the efficiency of the ETF wrapper. Mitnick also highlighted that institutional adoption, though gaining pace, is still in its very early stages. He explained that while ETF approvals typically take years, some firms are actively fast-tracking this process, talking in terms of quarters, not just months. This acceleration, particularly noticeable in recent months, involves more notable firms lowering barriers and granting approvals to their advisors to utilize these products. This clearly indicates a significant, albeit gradual, shift in the financial advisory world towards integrating Bitcoin ETFs into client portfolios. A key factor driving this institutional interest, as Mitnick pointed out, is Bitcoin's unique risk and return profile. While acknowledging that Bitcoin is still volatile despite recent declines in its volatility, he underscored that its risk and return drivers are markedly different from most of the rest of the assets in a traditional portfolio. This uncorrelated or even negatively correlated behavior in some periods makes a compelling case for portfolio construction for institutions seeking diversification. This strategic diversification benefit is incredibly attractive to large-scale investors looking to optimize their portfolio's overall risk-adjusted returns within the current economic climate under President Donald Trump. The broader market dynamics are also reflecting this renewed optimism. The options market for IBIT has decisively turned bullish, with calls becoming notably more expensive than puts. This negative shift in the one-year put-call skew indicates a clear return of bullish sentiment, a stark contrast to a brief period last week when puts had traded at a premium, reflecting downside fears. A particularly bold bet further illustrates this bullish mood. A trader recently purchased 3,000 call options on IBIT with a $77 strike price, set to expire on June 27th. This high-conviction move suggests an expectation for the Bitcoin tracking ETF, which was trading around $60.40, to rally by over 28% by the end of June. Pseudonymous observer Endgame Necro described this as either a bet on a major catalyst like a surge in ETF inflows, a macro pivot, or a regulatory green light. What's clear is that significant volatility is anticipated before June 27th. Currently, Bitcoin is trading robustly, having climbed back to the $108,000 to $110,000 level. It's sitting just under 4% below its all-time high of nearly $112,000, which was set just last month. The increased flows into Bitcoin ETFs have consistently coincided with these surges in the cryptocurrency's price. For instance, when Bitcoin reached its all-time high of $111,900 in late May, the total net assets across all 12 Bitcoin ETFs collectively hit an all-time high exceeding $134 billion. This symbiotic relationship highlights the powerful influence these regulated investment vehicles now wield on the broader Bitcoin market. It's worth noting that IBIT's success is not isolated, but stands out among its peers. Since its launch in the US in January 2024, it has consistently outperformed the other 10 spot Bitcoin ETFs that debuted on the same date. With an impressive $48.7 billion in net inflows, IBIT dwarfs competitors like Fidelity's FBTC, which comes in second with $20 billion, and Grayscale's GBTC with just under $20 billion. IBIT's dominance is undeniable, commanding more than triple the next largest vehicle. The industry has taken notice of IBIT's unparalleled performance. The fund was recently honored with the Best New ETF award at the annual ETF.com ETF Awards, and it also received the Crypto ETP of the Year accolade. These awards are not just ceremonial. They underscore the profound impact IBIT has had on the investment landscape and its recognition as a leading financial product in the rapidly evolving digital asset space. However, the narrative isn't without its nuances. While widespread institutional adoption is clearly underway, there are some discussions among Bitcoin's original gangsters, or OGs, who debate whether this mass adoption might undermine Bitcoin's original purpose of decentralization. Yet many of its earliest advocates disagree, recognizing the need for accessibility. As Blockstream CEO Adam Back put it, you have to have some empathy for the people who want to buy Bitcoin, but they don't know how to do it, and it's too complicated. This highlights the practical need for regulated products like ETFs to onboard a wider investor base, though some, like Back, still express a limit to their tolerance, not wanting 90% of it in ETFs or something because that might start to become a problem. This delicate balance between accessibility and decentralization remains a crucial point of discussion within the Bitcoin community. Looking ahead, the landscape for institutional Bitcoin holdings continues to expand. While IBIT currently holds nearly 20% of all Bitcoin custodied on behalf of public companies, private companies, governments, exchanges, and DeFi smart contracts, its dominance might face new challengers. Data from Wells Fargo, shared by VanEck's head of digital assets research Matthew Siegel, indicates that 6 publicly traded firms are collectively planning to raise or already hold up to $76 billion for potential Bitcoin purchases. These companies include Strategy, 21 Capital, Strive, Semler Scientific, Nakamoto Corp., and Trump Media and Technology Group. This projected pool of capital equals 56% of the spot Bitcoin ETF complex's current assets under management and 16% of the net ETF inflows accumulated over the past 16 months. This signals an even deeper supply consolidation in the months to come, further embedding Bitcoin into traditional corporate balance sheets. The narrative of BlackRock's IBIT is far more than just a success story for a single fund. It is a profound indicator of a paradigm shift in global finance. It demonstrates an undeniable and accelerating demand for digital assets, particularly Bitcoin, within the regulated financial system. The speed at which IBIT has grown, the volume of Bitcoin it commands, and the institutional infrastructure being built around it, from futures listings to loan offerings, all point to a future where Bitcoin is not just an alternative asset, but a deeply integrated component of diversified investment portfolios. As we navigate this exciting new era, remember that the financial world is constantly evolving. The unprecedented growth of IBIT serves as a powerful reminder of how quickly established norms can be challenged and redefined. It's a testament to the ingenuity of financial products and the persistent drive of investors to seek new opportunities. In an environment shaped by the current U.S. presidential administration, BlackRock's swift penetration into the digital asset market via IBIT is a compelling case study in market adaptation and foresight. Thank you for joining me for this deep dive into the incredible journey of BlackRock's iShares Bitcoin Trust. Stay informed, stay insightful, and we'll see you next time as we continue to explore the fascinating developments shaping our financial future. Goodbye for now.